Everybody's going to be talking about this, so let me catch you up. This week, Jack Dorsey announced that Block, the company behind Square, Cash App, Afterpay, is cutting 40% of its workforce. That's 4,000 people out of 10,000 gone because of AI. Now, the stock surged 25% in a single day, and that last part is what you should really be paying attention to. And it tells underlying a very different story than the headlines suggest. Because investors were already nervous. Investors have spent the last few weeks waking up to an uncomfortable truth that AI is not going to make every single company more profitable overnight. It might actually disrupt a lot of companies. Now, Centrini Research published a widely circulated note this week, imagining a world where super intelligent AI drives unemployment past 10% within 2 years. Now, that's hypothetical, not a prediction, but it went viral because it said out loud what a lot of people were quietly thinking and made this expectation much more consensus. But there was good news this week, though, because Anthropic came out and one of the main AI model providers and said that they plan to mostly partner with existing companies and build integrations rather than replace them. So that's not a minor footnote. It's the worst case fear that these big model companies would just eat every existing industry whole. That's not happening, at least not yet. Now to Block. Now, before you buy into the AI apocalypse narrative, let's call this more likely what it is: a company cleaning up a hiring mess from the pandemic boom. Block peaked nearly 13,000 employees around 2023, up from roughly 3,800 pre-pandemic, so 4,000. They hired aggressively and did modest cutbacks in 2023, 2024, but now are cutting from roughly 10,000 to 6,000. That's basically returning to their pre-pandemic size trend during the boom years, and now they're cutting back. This is the same story from the tens of thousands of layoffs you heard from Meta, Google, Amazon before them over the past few years. So this is also a company that renamed itself from Square to Block in November 2021. Peak crypto, NFT, Web3, literally weeks after Facebook became Meta. So they're very good at reading investor sentiment and capitalizing on the moment. So right now, the moment is AI, and yeah, this cut is real, but it's more like an overdue, right sizing dressed as a compelling narrative at the perfect time. And that's not like a knock on them. It's actually really impressive brand and company management. But here's why the doom scenarios don't quite hold up for me. The Centrini Research scenario assumes that companies will adopt the most complex autonomous technology ever built faster than they've ever adopted any technology before. I mean, think about your own company. How many of you are still running on Windows Vista, doing things manually because the systems are just too complex or broken or whatever, right? And there's all those weird exceptions that only that one person in the back office who's been there 20 years understands how to do, and none of it's in a manual anymore. That's hard for AI. Think about AI as a really smart unpaid intern, right? The tasks that interns don't screw up are usually things with a clear process and a very little experience-based decision making. Now, there's a decent amount of that work out there, but it's not most of the work. And every company that wants to actually automate will first have to redesign how they operate. Now, that's not a simple software update. That's years-long business transformation. So the companies that will move fast are nimble, founder-led startups that are already changing their processes every day, and Block is one of them. I mean, early-stage startup headcount has already been cut in half since 2021, according to Carta. But those are outliers. That's not the rule. Most companies are just not built to restructure overnight. So the more realistic picture, the clearest path forward isn't mass unemployment. It's that hiring just continues to slow or stall. Boomers are aging out of the workforce in huge numbers. Immigration is stalling, and the U.S. just doesn't have enough workers to keep pace with the economy. So last year, we had the lowest hiring in decades outside of a recession, but unemployment didn't increase. So AI fills that demographic gap without necessarily displacing people already in the workforce. And in capitalism, companies rarely say, I can do the same business cheaper, so I'll just, do the same amount of business. They say, no, I can do more business at a lower cost. So, efficiency drives growth, not just cuts. So companies aren't working 4-day work weeks because they can do what they did 10 years ago in less time. Like, it's all about growth. So for you, like, the place to watch is entry level, not mid-career. A 22-year-old getting into the workforce faces real headwinds because AI handles exactly that process-driven, low-judgment task that used to be entry-level work. But the positive side for the economy is that the 22-year-old can be, reskilled relatively quickly. So the truly catastrophic scenario for the economy would be more that tens of millions of 50-year-olds with 30 years and one job needing to retrain into a completely different industry overnight. But it does not look like we're on that kind of path. What to do actually with this? If you're early in your career or advising someone who is, learn AI tools fluently, not just how to use them, but how to build them, implement workflows around them. Understand that your real edge is in judgment, the experience-based decision-making that isn't documented anywhere and that AI genuinely can't replicate yet. So, pay attention also to the positive side of this. If AI is putting unlimited, enormous capability into any individual's hands, and that means more opportunity for independent businesses and startups than we've seen in a generation. Start a company, build wealth. That means more competition in the economy, and that's awesome. So if you're investing, the signal this week is that the market is actively rewarding layoff announcements, and that creates an incentive structure worth tracking because companies will do what boosts their stock. So we may see more layoff announcements labeled as AI. Block's 25% single-day pop on 4,000 job cuts is the most important story of the week, but not because it signals an end of work, but because it tells you exactly what the market wants to see next and, how to think about who's best positioned to deliver.